Hey everyone, Merry Christmas, Happy New Year. I hope you've all had an amazing year, whether or not it's overall profitability or maybe it's just an overall growth and understanding of your Forex journey and how to read price action. I hope you've enjoyed the videos that I've given you thus far in 2022. And, I hope I can make 2023 equally as good and give you guys even more value. In this video, guys, I'm going to be giving you a topic to backtest and dive into during your holiday breaks. We're going to be talking about WYCKOFF, accumulation and distribution, and how it helps you in your overall trading. I use this philosophy, this theory,
to confirm most of my trades
in order to help me get the edge inside of my supply and demand zones on the lower time frames. And you can even use this in the higher time frames. We just have to understand what it all means and how it works. Okay, so before we dive into the idea of WYCKOFF and accumulation and distribution, let's talk a little bit about what people tend to typically do when they are trading the Forex market when it comes to, let's call it, global smart money concepts, right? The act of, chalk and order blocks, etc. Okay, so let's go through a little bit of what the average person does. Okay, so if price is making lower highs and lower lows, and then all of a sudden we have a mitigation back to the point of control, and then all of a sudden what does price do? It breaks this overall structure. Okay, so we have broken one area of price. Okay, what typically people do is then they look at this being a order block, right? And they'll put their limit here. Maybe they'll put it at 50%, or maybe they'll cover the whole order block, and then they'll trade that region. And as price comes down, they're hoping that obviously it does this. What they fail to realize is that inside of this demand zone, there will be an act of what's called accumulation that takes place inside of here. So the premise of WYCKOFF is accumulation inside of demand and distribution inside of supply. So for instance, if this was supply up here, the price comes into this, there will be a distribution schematic to the downside if this supply is going to hold. Now, sometimes the distribution or the accumulation will actually form just to bring price back to the original impulse that made the high. So if we have an unmitigated demand here and price makes inducement, price will make a distribution sometimes just back to here, and then it'll make an accumulation to keep going because this overall supply wasn't going to hold because maybe price was bullish and this area was a weak high. Okay, so the overall concept, you guys, using everything that I've taught you so far in this YouTube channel, is to understand your POIs. So if we have supply here, it doesn't matter what your POI is to the left, then we would be waiting for some sort of distribution. And if we have demand, we would be waiting for a confirmation of accumulation. Now, what you can do, folks, is understand that the accumulation and distribution will happen on all time frames, meaning when I get a 1 minute order block, I will look for an accumulation on the 5-second or 15-second charts. This gives me the ability to see whether or not the overall buyers are going to step in, and we can avoid this idea of a limit order in your trading system, because I do not like putting a risk entry in hoping that this overall demand will hold. Because if you know anything about liquidity, price can take the liquidity and actually just keep going lower. And this is maybe what some of you are running into, where all of a sudden this overall price action you think is a chalk, and price just ends up making a distribution and then running the low liquidity here because this needed to be run for fuel, and this was a flip zone, and this might have been just the inducement liquidity for this unmitigated flip up here. So we need to start confirming our trades. Inside of our zones because of the fact that we're lower time frame traders, and we want to be able to get the most confirmation for our setups. So what I'm going to do next is show you some common Wyckoff distribution and accumulation schematics that we can start to study for our trade confirmations. All right, let's go through 4 common accumulation schematics, okay? Now, what I want you guys to understand about Wyckoff and how it works is I am not going to be teaching you all the different labels that other people might talk about in terms of UTAD, ST, retest, all that stuff. To me, none of that really matters. It's about what structure is doing, okay? It's all about what structure is doing, all right? So phase A will be your normal trending market, okay? Price making lower low, lower high, lower low. Now, all of a sudden, as phase B starts, you're going to start to notice that the overall price starts to break structure, okay? Now, people would classify this as your first chalk. However, we have to understand liquidity is a powerful move in the market. So when it starts to take liquidity here to this upside, we then can start to say, okay, we have some signs of weakness in the market. Now, signs of weakness to me, I'm going to talk about in both directions. There are people that will talk about signs of strength because the market's going up for accumulation. I just talk about it as signs of weakness of the trend. So that means that if the trend was strong, then overall price should be respecting lower highs. And if the price starts to take these areas out, then we start to look at signs of weakness to see whether or not price is accumulating. Now, what you have to understand, folks, is that this action has to be in a higher time frame demand, okay? Now, if you're on a 1 minute demand, then you'll see this sort of stuff happen on the 1 second and 5 second charts. If you're in a 15-minute demand, then you'll see this happen on the 15-second, or sometimes you'll see it happen on the 1 minute chart. If you're in an hour demand, you might see this happen on the 1 minute chart. Okay? The reason for that is because the internal structure here of this overall accumulation will be micro. It will be internal micro market structure changes. Okay, I want to be very clear about that. It will be internal market structure changes, not external market structure changes. Okay? Now, what you're going to start to notice is that we want to start to see the overall price action sweeping liquidity, which is going to be another lower low, and then we want to see price breaking order blocks to the upside. Now, this is an accumulation pattern where you have 2 deep mitigations of your lower lows, and then price takes off. This is not the one that I typically trade the most because it can be a little confusing that you don't know when that next spring will happen, okay? But this is a schematic where we would be trying to get into phase C or phase D of the overall trend change. So if this is your last lower low, this is or lower high, this is your lower low, then as price is distributing away, breaking these zones, we can be entering here with our stop loss at this flip zone. Okay? So this is accumulation pattern number 1. This is not one that I typically use all that often because I don't like to guess these lows. All right? In the next one, I'll show you what makes more sense. So this one, folks, the accumulation schematic number 2 is typically what I use the most. This is where in phase A, we start to see signs of weakness where price comes into this area here. We make a low, we hold this. We then break this overall structure here. Sorry, my lines aren't straight. We break this overall structure here. And then price makes what's called a spring. This is where price takes the last low. It then breaks internal structure here with some liquidity. It then comes back to your origin OB, and then it reaccumulates, and we can get in here on phase D of the market moving away, because this now is your spring of your lower time frame accumulation inside of a 1 minute demand. Okay, this is the one that I typically use the most, and we'll be going through this in the charts, and I'll show you examples. Here is another accumulation schematic. This is classic to kind of that head and shoulders type view. Price is in a downtrend. Price starts to accumulate or create a range here. It comes back up to the origin. It keeps going, but it starts to create trendline liquidity, meaning perfect mitigation. And then all of a sudden we create a low. We have a chalk. We retest. We don't get in here yet. We wait for this liquidity area to break. And then as price chalks, creating new liquidity back into the flip zone, we can then use second confirmation here for a change of order flow, and we can get in here. Now there are times, folks, where I get in here as well, knowing that this is a flip zone, and I'll put my stop below this low because that's the last mitigated low of the spring, and then the market takes off. Okay, so phase C and phase D are areas that you would be getting into for phase E, which is our expansion phase. Okay, now let's look at the last example. This one is where price is basically creating a complete perfect mitigation of your overall supply zones, and it keeps creating a trend line, which is that trend line liquidity that I talk about a lot in the course and the mentorship, as well as I believe in the YouTube here, where all of a sudden, guys, price will take and make a spring in phase C. Okay, it breaks structure. It actually shows us signs of weakness here because remember, this swept liquidity. It made a low, so this should be strong, but instead price sweeps this last low, breaking this structure, causing a new flip. And again, this is inside of a 15-minute demand. And then all of a sudden we're in for phase D and phase E of a new expansion to take out all of this liquidity here that has been built up from a previous trend. Okay, this is the key when we are trading the Forex market, is we want to be involved in the liquidity taking of a trend that was previously formed. All right, so before I go on to any distribution schematics, let's go to the charts and review some of these accumulations that happen inside of POIs, and I'll even show you some of the trades that I took and how this relates.
Okay, so let's look at the 4 hour. This was a daily or weekly demand zone. Okay, this overall sell to buy, you guys, is a demand OB on the higher time frame. Okay, on the higher time frame. This is the 4 hour, so this is a daily demand zone. Okay, with that being said, if we're looking for a big move, then what can you start to wait for if you believe that this overall liquidity will get run? As you can see, we start to create the Wyckoff accumulation. Okay, so what do we start to notice first? These lines, guys, delineate the phases, and as you can see, this is making lower lows, lower highs. Okay, so price is respecting block flow that I've taught you guys. It's also creating perfect liquidity. Okay, what does price do? Price takes the liquidity, it comes back to make a lower low, it respects this lower high with this wick, and then we immediately break structure. This is your spring. Now when the spring is formed, we look for the overall flip zone, or in this case, order block. Now on the lower time frames, guys, this would have been a 1 minute or 1 hour flip zone. Okay, this candle breaking internal structure and then external structure actually creates a flip zone. So you could have entered here and that would have been a beautiful move, as this is the 4 hour charts, guys. If you caught this trade on the 1 minute, 5 minute, 15 minute, this would have been a 1 to 10 plus RR trade all the way for phase D. But what do we talk about? You can get in on phase D, but you can also get in on the mitigation of the left behind overall order block. And price came back down, and then boom, we have our expansion phase, where then all of a sudden new block flow will start to hold as price is rapidly taking all of this liquidity out. Okay, these, if you start to see these accumulation phases forming, then you would have to understand we're in overall demand, we've accumulated, which means we're most likely going to the supply over here. Okay, let's go to another example on the lower time frames. So what do we have? This was a 4 hour demand zone. What do we have? We have our normal trending market. Okay, so what is price doing? Right, we're respecting block flow, block flow. Okay, so we've created a fair value gap. Price comes back to fill that fair value gap, and what do? We create another lower low. Now, this here is where I would have probably thought this was the spring. And right here, we had a flip zone and an order block after what? Breaks of structure here. So we could be selling the mitigation here, and we can be buying. Now in this case here, this still on the 1 minute chart, guys, would have been a beautiful trade. Okay. However, price decided to sweep one more liquidity, and then what does it do? It's, see how this is a trend line? We retest the spring, we break out of the internal structure, sweeping the trend line liquidity, we come back for the origin flip zone here, and then boom, away it goes. Okay, so this zone and this zone, I would have tried to be entering for a big move to fill all of this and run this liquidity here. Okay, and as you can see, guys, as price now makes phase C, it comes back, there's a fair value gap here. Okay, we start breaking new structure. Sorry, my lines are not very straight. We break new structure, we retest, and then we create a new unmitigated demand, and then it comes back, and then phase E is what then wipes out the accumulation, or sorry, the liquidity and supply. Okay, so this area, this area, this area are all areas you can be trading in, and I would have probably looked to trade here, but price never reached it until later, but you still would have had a nice trade here. Okay, these are areas that you can look at for your accumulation phases and how you can understand why price did what it did in this zone. Okay, let's go to a lower time frame example. We are now in a 1 minute accumulation inside of a 15-minute demand zone. Okay, what does price do? We have our normal trending market. We break out of this OB. We start to see signs of weakness. Why? Guys, remember the 1 minute candles are just as important as the 15-minute candles or the highs of each wick. This shows us that this wick was not respected. This low could be strong, and what does price do? It comes back down because we OFC'd. We fill the imbalance of the supply order block that was never mitigated. Okay, you can see here, this area of price was never mitigated off this overall push. This OFC warned you. It came back up, and what does it do? It now breaks structure, creating our spring. We take more internal liquidity. We retest this wick. We have this now new OB here, and we can be looking at these overall flip zones of phase C, like I said in the previous slides, where now price breaks structure, and we have a flip zone here, and we can be looking to put our stop loss here with our stop loss below this low, and we can trade for phase D and E. As you can see, price came back for then this unmitigated OB after this overall liquidity was taken. Okay, this is your accumulation for a big move to the upside, and then there's even more accumulations that form at this OB. If you were to go to a 5-second chart, this is a perfect Wyckoff. Okay, we take a low, we take the high, we take the flips, and we go. This would have been a beautiful accumulation inside of this overall demand order block, and you could have rode this expansion again all the way up for this liquidity. Okay, let's go to an even lower time frame example. What do we have here? We have a 5-second accumulation inside of a 1 minute order block. Why is this an order block? It's a sell to buy. Okay, now there's even a 1-second accumulation happening here. As you can see, price takes out this wick, price retests the supply, break structure right here would have been your phase C and D, and then this would have been the expansion phase. Okay, but what do we have as price re-enters the sell to buy order block? Well, we have a trending market, right? Trending market. Price takes the first wick out. We create a new low. We then retest the high. We make a spring. We break internal and external structure. We've retested the overall main demand. And then this is a gap, but this is a flip zone. And we have an order block here. So this overall order block, okay? And then what does price do? It creates your phase D mitigation and then your expansion to the upside after the warning signs of this overall accumulation that happened inside of the demand. Remember, price will accumulate in demand and it will distribute in supply. It's basically the opposite of this. As you can see here, right? Breaking substructure, retesting, breaking more structure, retesting, and we go, and then we have another order block here. Oops, sorry, my lines. Another order block here. Okay, and you can see how price then distributed to the downside. As you can see, folks, that price accumulates in demand. We just need to learn how it works so we can confirm our overall trade. Let's now go to the charts and see how you can see accumulation as price is making demand in a trend. As you can see here, guys, price came into an overall higher time frame demand. Let's go into the charts here. Okay, we have two examples of this. Price, guys, price is making higher highs, and it came into this overall demand zone. Okay, we have a high from a sell to buy, a bigger sell to buy. That means that the overall time frame, there is an order block here that we can look for a trade against if we're flowing with higher time frame block flow. Okay? If we now go into the lower time frame, and guys, I'm sorry, but I'm not going to be getting into the sub-second, 5-second to show you all my confirmations. I teach a lot of that in the mentorship group. I give tons of value here on YouTube for free. So if you want to see how things can be traded on the 5-second to the 1 minute, then you can join the mentorship group or the course, and I go through all of that stuff. But if you notice, this is the 30-second chart. As prices come into that zone, you have a bigger accumulation. You have a phase D mitigation for an expansion. Could have got into that trade. As price comes back down for a bigger mitigation, because this was a 15-minute demand, that means that you're going to need a 1 minute to 5 minute overall mitigation. You can see that when price comes back into this overall demand with a left behind order block, sell to buy, then what happens? Let's go to the 1 minute. And some of the accumulations, guys, are not going to be that clear on the 1 minute. So if you want to join the mentorship group, you can. But let's see what starts taking place. We come back into the origin, we accumulate, boom, we break structure, we make another flip zone, we accumulate, we break structure, we have another flip zone, we accumulate, and away she goes. So let's go into a couple of the trades that I took overall based on my POIs from a higher time frame flip. So this was 15-minute demand, and as you can see here, there was an accumulation that formed, and I got into this trade. We had 7 RR, we had a break of structure, price came back into the overall accumulation origin, and we had another accumulation, and we get in here, and then phase D, and then we have an expansion. All right, obviously we could have been selling the market too. We have a distribution that I'll be getting into in part 2 of the YouTube series on WYCKOFF. But we have another accumulation, and we got another 5R. Overall, 10 RR, and it ended up actually being a counter trend trade, and the overall 15-minute accumulation started forming here. Okay, so price came back down into that second POI that I had marked. If we go to the 15-minute, there was 2 POIs. This POI that took structure, creating a sell to buy, and this POI here. Nothing mitigated those 2 POIs, and so I was looking for my trade. As you can see here, I should have been shorting also off here, but that's okay. We already secured 10 RR, and then we start another accumulation. There's your spring, here's your OB, and we have an expansion phase. Now price came back down, and I saw that price had not mitigated the overall demand that caused the expansion, so I got into another trade. There is a 5-second accumulation happening right here, and I was able to get into this trade and run the overall liquidity of this imbalanced Forex market move. Okay, so I know it's brief in terms of my overall setups, but if you take what I just showed you and you go back and look at the screenshots of the accumulation and distribution, you will start to see that inside of demand, inside of supply zones like this, you're going to start seeing distribution and accumulation. I will touch on the distribution in the next part of this series, but I hope that this has started to give you guys some context into how you can look at confirming your trades inside of these overall demand zones that are left unmitigated, and you can confirm them with the lower time frames by waiting for proper accumulation to form. All right, so with all that being said, I hope you guys have a great holiday. I hope this video is helpful. I know it's just an introduction into WYCKOFF and accumulation and distribution. But stay tuned. This year, there's going to be more content coming. Hope you all have a Merry Christmas, and we'll see you in the next one.